Now we'll talk mutual funds. As we've been telling you constantly the last 10-12 days, retail interest has picked up in the stock market once again. Is that translating into higher interest for the mutual funds or equity mutual fund space as well? Dhirendra Kumar of Value Research Online joins in to talk about that. Dhirendra, morning. First question on the participation in the market now. At the end of February, we heard that mutual funds collectively were sitting on 20,000 crores plus of cash. Have you seen the first signs of that getting deployed in the month of March?
They might be, but I think more importantly, on the other side, insurance companies' mobilization in their ULIPs is very significant in the month of March, and right now, the year-end targets, so that is being driven up. I think, the market rally in the near term has something to do with part deployment, because yes, mutual funds were sitting in all a total cash of 20,000, but of that equity funds, diversified equity funds, the generic ones, from those funds there was about 16,000, and I think the percentage of total net assets that was quite significant, because it was 18% of their total assets under management in equity fund. That has been going up for the past 4 months. Last month it was 15%, this month it was 18%. So there will be, and little bit of market going up a little bit, fund managers do come under pressure to deploy a part of it. And money flowing into tax saving funds, that will also ease their pressure. The fresh money coming in, so they will be in a position to deploy money into the market. Most of the cash preparedness has been on account of anticipating redemptions, which has picked up, which have been fairly steady in the past 3-4 months.
Morning. There are news reports though suggesting that the entire ULIP scheme has not seen that much by way of interest or appetite. In fact, even people from the insurance companies have indicated that that's something they want to focus less and less on. You would refute that? Do you think ULIPs are still the space which are sucking in the maximum amount of money?
I think so, and I would assume so, because what the insurance companies are saying is that the growth rate of ULIP has come down. But that doesn't mean that they have stopped getting money. It was growing at a frantic pace. It is now growing a little slower. But even if it's growing, then it's quite significant, because ULIP, the entire old mobilization in ULIP is effectively a SIP. So the old flow continues, and then their new sales decelerate, but they continue to get money.
Have you done any kind of analysis on how much money the tax saving funds might mop up in March the way they are going, and how much of that will immediately come into the stock market?
I'm hopeful. It is likely to be nearly substantially lower than the earlier 2 years, and of course last year and the year before last was sizable. The big difference which we see right now is that the closed-end tax savers are virtually absent this time round, except from funds which are getting started, fund companies which are getting started. But even on a conservative estimate, I'm expecting that this year round tax saving funds will get a minimum of about nearly 5,000 crore, 4,500 to 5,000 crore in tax saving funds.
What exactly has been the experience in the debt funds, though, Dhiren?
Oh, debt funds, everybody was caught by surprise. In fact, the standard performance chasing was at play. The best period happened in the month of October to December, and which nobody could anticipate. In fact, that was in the month of October, no fund company could anticipate the big liquidity crunch and the big spike up. And the return which was generated in the fixed income fund in the last quarter, a lot of investors tried to pile on that, and then we realized that the turbulence in the past 2 months is something which has shaken investors. Most investors were getting into gilt fund or income fund, and they are in for a nasty surprise there. So it has been very disappointing, and I think this will lead to individual investors' interest, retail interest into fixed income fund. That will certainly wane down, going by what has happened in the past 2 months.
Mutual funds have put in about 900 crores in this series as we close it up today, Dhirendra. It's a very small sliver of the kind of domestic money we've gotten. Is it your sense that both that percentage allocation to equity and the kind of cash levels mutual fund managers have might lead to a lot more mutual fund money coming in?
It won't be, yes, I'm hopeful that, mutual fund will be deploying more money in equities, but it won't be substantial in the overall market context, because they continue to remain a fairly marginal player in the, relative to FIs and relative to insurance companies, they will be marginal, but yes, it will be larger than what it has been in the past 3-4 months.
Thanks, Dhiren, very much for joining in. That's the take from the mutual fund world, how much cash is getting deployed, how much money the tax-saving funds are getting in, and ULIPs are too.